Hi guys, McGregor here. I just promised I'd show how to use fib time analysis to estimate correction time, and I just want to show you that this is quite simple, right, to use. I show you how, right? So first of all, we didn't really need RSI to show how it works, but it will be helpful for a little bit. I have my markings here. Okay, so first of all, we have to have an impulse wave finished. All right, any impulse wave means uh, first wave or third wave or fifth wave. Okay, to maybe fifth wave not because this is the end of the whole impulses and this is the ultimate wave. After that, we have a bigger correction. So we have after fifth wave we have whole impulse to measure. But I'm going to show you based on the first one. So we have finished impulse here. This is already finished, and we can show you based on that, right? So let's start, okay? To make time analysis, we use Fib Time tool. You can find it here, Trend Based Fib Time. Okay, this is the tool we're going to use. So first, you have to find the impulse wave. We can mark it as by using trend line from the origin of this wave to the end of this wave, right? So this is the third, and we're going to use the third one. It's here, okay? And to make time analysis, we don't need really price at all, okay? We are interested only in time. So you're not marking, the level, the price levels. We need time. So from the left to the right, not really important where price is. So as I showed you, basically you can find, of course, the fifth wave by marking third and fifth wave, finding divergence, right? Because as you know, divergence is created by end of wave third and fifth, okay? We have divergence by time. This is our confirmation that the impulse has been done, has been finished. At least, at least one of impulses, because sometimes you have 1 2 1 2 1 2, but I showed it in previous video. Okay, let's get back to what I talked about. So now we have the fib time analysis, right? We have the origin of the impulse and we have end of the impulse. It doesn't important. It's not important where you put that. So we're not using price at all. So let's put that here, right below, to make a clear view. This is the start, and this is the end. So we can use it here. What we are doing is, because we have third point as well, but this serves for impulses, and this is not for correction. So it's not important at the moment. The third point we are using at the same as the second one. So we're clicking second time at the same place. And most common relationship to the impulse waves is 0.5 to 0.618. I am using 0.618 as a most common, but this is the zone, right? This is the zone we can use. And this is what's happening more often, right? This zone is happening more often. Yeah, I just want to make it clear. This is too much. Fucking hell. Sorry for cursing. But we are family, so no problems. Yeah, background. Come on. I'm not using this that often. and I have too many lines at the moment. Yeah. Okay. Okay, doc. Let's, yeah, can be this and yeah. Okay, we got it clear right now. So that's the most common relationship with fib time analysis. Okay. What else we can have here? I mean, this is the relationship. This is what you can use every time you spot a complete fifth wave. Like, I mean, I'm not going to show you exactly how it looks like, but basically, this is the probably first one, second, and this is the third one. We have correction. We have the fifth one. So you would. This is daily chart, so you have to come to the down to the smaller time frames to see what's inside. But I can see it right now, so not important for me to come down to it. I just want to show you how it works. Okay, so right now, I mean, we didn't even have this, right? This move didn't happen yet because we used this based on our count, right? We had one, two, three, fourth, and a fifth wave in here. So based on that, we could estimate that this can happen here. But I want to I want you to remember that this is Elliott wave. This is Elliott wave time analysis. This is Fibonacci tool, which is helpful with the market structure with the Elliott waves, but you can't use it as a single one. Okay, you can't do that. We would have to have many tools combined. Okay, so when you know Elliott waves, you would probably see that we have ABC here. Okay, structure. You would notice that. So what you're gonna do? We are using Fibonacci expansion, and we're expecting relation 1 to 1, right, as a corrective move, right, for this zigzag ABC to be finished. That's what we are expecting. What else can happen? Quite often, we have um, connector connecting connecting corrective pattern. For example, expanded flat or normal flat or something, and price is doing complex corrective moves. Okay, but it's not important at the moment. I just wanted to show you how to use fib time analysis as a helpful tool to estimate when price can finish corrective move in time. So you can mark it even if you take it out, right? If we are taking this out and you know in time where to expect move to the upside. What else we have, right? What else? We have, of course, obvious trend line based on tops, right? So we have another clue, another tip, which price action gave us to expect breakout at this level, okay? And this is what I wanted to share with you at this moment. Uh, as always, I am going to repeat every single time. This is not the tool that works 100%, right? You have to have complete impulse wave. You have to have confidence in your wave count. And as I am repeating in our Telegram group every fucking time, sorry for cursing again, Elliott waves are cool when you can see it on a history very clear. But when you are using it at the current time as now, you must see it very clearly. You must see it as something obvious. It is unacceptable to think, this can be something and this may be something, or maybe I do it like this way, right? As a fourth and as a fifth, or maybe I do it something else. Maybe this is maybe not correction. Maybe this is the start of something bigger to the downside. No, you must see something. You must see it, right? It's not that you are looking at the chart and you see price looks somehow, and you think to yourself, "Oh, I can see many scenarios at this time frame. I can see 100 scenarios on the lower time frame." No, this must be something you see at first sight. Okay, you don't have to think too hard to see something. This is what you can use Elliott waves for. If you see something obvious, as for trading, if you want to play, spending weeks and then analyzing history and drawing, multiple counts on the chart, go ahead. But you're not gonna be a good trader. You can see multiple Elliott wave traders or analysts on YouTube, and this is useless because usually you can have 5 or 10 counts to the upside, sideway counts, and at the same time he's going to give you 5 or 10 counts to the downside, and every single scenario is possible in their opinion. So useless. You're not gonna trade that ever. You'll be more confused if you're going to start do it this way. So I just showed you one tool, which is the tool I am using sometimes, not always, sometimes when I see something obvious. And what else? I can tell you what I am considering here. I am considering wave fourth here. This can be wave four as a whole. So like this, right? And we're doing fifth to the upside. This is one of my views at the moment. Okay. Uh, and another count can be that this is beginning of the bigger move to the upside, and we are doing actually the second wave. So I'm going to clear it, and I'm going to show you what I consider. So this was corrective move. This was the bigger correction, this one here, and we started to move impulsively to the upside. So if this is gonna be the fourth wave of this impulse, so we are going to make fifth wave, and we're going to correct again. This is the one of ideas I got. But I also consider that this can be complete as a first. We can do second and the third to the upside, and then fourth, which must be at least same as a wave two, as a second wave, and then fifth, and that's it. And we're going to move to the downside correctively again. But this is less likely to happen. For now, I think this is the fourth wave of the whole impulse here. So one, two, third, fourth, and we're going to make fifth wave to the upside. And this is what I'm waiting. And if I'm going to see divergence here, right, another one is a confirmation. So this will be the triple divergence, because we had first one here. I mean, I'm going to take it out because this is not showing good. We had one here, right? Uh, and as I said, this is usually, I don't know if I said that. Well, okay, I will say divergence occurs when we have the third and 5 wave connection. Okay, this is the time when divergence occurs, and basically when it happens, it gives you a sign that impulse has been finished at the moment, and we're starting to move collectively to the downside. Okay, and after that, you can see if we are doing impulse to the downside, right? I take it out. Uh, by analyzing waves, by analyzing structure, right? You can estimate either this is corrective move to the downside, or this is impulsive move to the downside. When it's impulsive move to the downside, you're gonna see a first wave, second, and then bigger move, the bigger, faster move. As I am repeating in our Telegram group, bigger, fast move to the downside. Usually, this is just a drop and really, really fast dynamic move, and then more complex correction as a fourth wave. And the fourth wave is usually the wave people are very confused. What's happening? We are moving sideways. We're moving to the upside. Very fast dynamic moves inside that correction, and then we have the ultimate move, and this is going to be impulse wave, right? This is going to be impulse wave. Corrective waves are usually 3 waves, ABC, which the first one is and the third one are impulse waves, and B is usually 3 wave move to the upside. Damn it. I don't like Tradingview. I used to use Motive Wave software a long time ago, which is the best for Elliott waves, but as I said earlier, I'm not using Elliott waves for trading. It's just a tool I'm using to help me sometimes when I see clear structure, and only that time. So, as I said, I'm going to repeat again. All right, fib time analysis. We're going to estimate origin of the impulse here. We go and estimate end of the impulse here, and it gives us the third point, which for correction is not needed. So we putting the third point at the same place where we put the second one here, and it gave us a very nice area, very nice area. We can take a look and use another tools we got, such as pivot line based on the tops, right? So breakout is our confirmation that we are going to move to the upside, at least temporarily. Okay. I hope everything is clear, and I hope that this tool sometimes, not often, but sometimes, for at least few of you, will be helpful. Okay. So that's it, guys. Have fun. I see you soon.